take a deep dive into the market because right now we're at a very crucial level where investors are gearing up for the election. Nobody knows who's going to win, but I've got some highlights for you. I've got some things you need to pay attention to, and most importantly, I've got 3 stocks for you today that I'm seeing a good flow of insider buying, and at the same time, I'm seeing relative strength increase. It's not, if you see one, that's not good enough. But when you're seeing a good insider buying and you're seeing relative strength increase, that's a good sign that the stock may be going higher in the quarter to come. So let me do my analysis and then I'll talk about the 3 stocks. So the first thing I want to talk about is the NASDAQ 100. If you look at the number of stocks in the NASDAQ 100 trading above the 200-day moving average, we are right now at a very, very high level. We're in the 80s level. And I'm going to tell you right now, if you look back 15 years, we don't really rise much from these levels. That tells me that I'm expecting technology, not necessarily to have a massive selling pressure, but I'm expecting technology to cool off a bit, to give us a little less upside or not outperform the market as much as it has over the past 9 months or 8 months or however, let's see, February, pretty much all of this year, we're in January, so about 9 months or so, 8.5, 9 months or so. And I mean, you could see it right here. We were really high up. We bounced to the 20th percentile in momentum levels, and then we went all the way. And again, anytime the number of stocks in the NASDAQ 100 gets above 80th percent, above the 200-day moving average, not the 50-day line, you could expect the market to kind of coast a little bit or to cool off a bit. So the bottom line is expect the market to kind of, don't expect a major home run in technology stocks. There's going to be some that are outperforming the market, but don't expect the NASDAQ to double over the next couple of months. Number 2, I'm looking at volatility, all right? Basically what I'm saying is expect other sectors to take charge and lead and the NASDAQ to start following because it needs to cool off a little bit. It's just a little bit overdone right now, at least based on momentum levels. Now what we're looking at is the volatility index. Now the CBOE volatility index, the VIX, $VIX, it usually, and what this does is, let me explain to you what the VIX does. It follows the at-the-money S&P 500 options. It measures the implied volatility, basically what the index expects, what the option traders expect the volatility of the index to be over the next 30 days. The VIX is a 30-day index, so not over a year, over 30 days. It's a short-term index. There are some volatility. You can go further out, medium-term, long-term, but short-term, you got the VIX. And it's a really good indicator because it's giving us a good insight into how scared or nervous or how greedy the traders who are buying S&P 500 at-the-money options are. And anyone buying those options has a really good gauge of the market. And as you could see here, ever since February, I'll go a little further out. Notice it was trickling right around the 10, 12 level, give or take, and it went all the way up to 81, and now it's at 28. But the thing about it is it's been at these heightened levels, and this level is about 2.5 times the average volatility that we're seeing in the average. And what that's telling me is that markets are still showing a very high degree. If you take this aside, this craziness that we saw here when the Dow Jones dropped half of its value and the S&P dropped a third of its value, if you forget about this and just know this was an abnormality. This is like crazy fear, people jumping out of the window. As you could see here, last time that happened, it was 2008. So that doesn't happen often. But if you look at the current level right here, I'll go back to a regular time frame. We've seen heightened volatility for some time. And that's telling us the markets are sitting on pins and needles. And they're not necessarily sitting back in their armchair and saying, oh, we could rest now. Everything is stable. No, we have higher volatility. And that's telling us that at any minute, we could see some downside correction. And if you look at the 200-day moving average or the number of stocks, you got 85 out of 100 stocks trading above the 200-day moving average. And if you look at the number of stocks trading above the 50-day line, and I like to go real long term because this helps me with positioning. If you could see here that we went down to about the 50th percentile, we're bouncing back, but I'm expecting the sentiment to cool off and continue going lower because whenever we go above this line, see that? We go above the 80th or 90th percentile, we go down to the 10th percentile. 90th percentile, 20th percentile. Look at this. 88th percentile, 18th percentile. We haven't done that. Even when it goes to the 80th percentile, it cools off. It hasn't done yet that. After being stretched out the most we've seen in 15 years. And that's bouncing back right now. But again, I would be very, very cautious. Now, let's look at actual stocks, indices right now. Now let's look at the S&P 500 to see if the indices are showing us any strength or weakness in relationship to the VIX. As you can see here, we're slightly above the 50-day moving average, and it looks like we're above the 50-day moving average. But as you can see here, we don't have 2 days clearance. We only have 1 day of clearance completely above, and today's session is not even over. So as far as I'm concerned, we're still sitting at the 50-day moving average. If you look at the NASDAQ, you will see that we're exactly in the same position, just kind of slightly above the 50-day line, just kind of sitting there. But again, we're still touching the moving average. I don't like that. But here is the big surprise, and I've been talking about this for the last few days. The Russell 2000, that has been strongly lagging behind the overall market since the trade war started. Look at here. Look when it made all-time highs. The S&P made all-time highs September 2nd. This sucker made all-time highs January 17th or thereabouts. So it's been lagging. Look at this. Let me show you this. I'll give you some evidence of this. Look at that. Lower highs. Look at the S&P. Look at that. Let me just continue this here. Higher highs. You see that? Real simple. The Russell stuck here and then kept going down. Never made a higher high. But now, last few days, last few weeks actually, and let me tell you why. It's pricing in that Biden's going to win the election, and I'm going to tell you why. Biden's going to put an end to this trade war faster than you could say what trade war, okay? Trump is not. The Russell 2000 stocks, the small cap stocks, they're very fearful of the trade war. Why? Because they have been underperforming with the trade war. They're one-trick ponies. They're much more vulnerable. Whereas the S&P 500 and the NASDAQ have large conglomerates. They don't have one-trick ponies. They have a lot of market cap. So these stocks have suffered more, but they've been rising. Look at this. Right now, we're up 1.52 on the Russell. Let's look at the SPY. We're only up 0.11. Let's look at the QQQ. Look at that. Down 29. And again, the Russell, all of a sudden, from nowhere, it's starting to outperform. Now, do I know whether Biden or Trump is going to win? I have no idea. But I'm telling you right now, the small caps and Trump, the small caps and Trump don't get along. The small caps and Biden get along. Large caps love Trump. So again, I'm not seeing a big accumulation here. Now, I almost forgot before I get into the stocks, bond market. Bond market is cooling off a lot, all right, a lot. Cooler bonds, weaker bonds, higher interest rates. Higher interest rates, better for bank stocks. Keep your eye on the financial sector, especially if the bond market keeps going lower, because that's telling us that the market is expecting higher rates. Now, the Fed has told us they're not going to have higher rates, but the bonds are telling us otherwise. They may be expecting higher rates, but the bottom line is this is positive for the stock market. So we have higher volatility. That's not great for the stock market. We have momentum levels that are a little overbought, not so great for the NASDAQ part of the stock market. We have the small caps rallying, really good for small caps, and we have the bonds moving down, which is good for yield, which is good for bank stocks and financial. Now, I want to talk about the 3 stocks that I think will be rising that are seeing some inside buying. First stock on the list, let's start with the big one, NVIDIA, all right? I mean, look at this thing. Look at the 5-year return, 1,858%, all right? Talk about growth. Revenue, 133 over 5 years, 5-year earnings, 288%. This is a killer. It's probably one of the top 5 stocks right now. I love NVIDIA. And look at this relative strength. Peaked out, and it's ready to go higher again. Now, according to my information, company director Stefan Neal appears to be bullish. He got 450 shares. It's not a lot, but he now has 3,978 shares. He's dipping his toe in the water again. His average price, $498 per share. Now, NVIDIA, they just acquired ARM Holdings, a designer for chip for mobile phones, for $40 billion. They've got a lot of upside potential to go. Aside from these COVID-19 jitters, I don't see this stock cooling off. I see it going higher. And the fact that insiders are buying is a good sign. Second stock, Broadcom. I've loved this stock. Look at the 5-year return, 202%. That's outperforming the market by a good shot. Look at dividend growth. This stock is printing money, 838%. Earnings, revenue, and look at estimates. Past quarter versus next year, all are positive. Most importantly, if you look at the relative strength, look at this. I love this baseline. These are my favorite. It goes up, peaks out, bases out, doesn't touch the 50-day moving average, and is ready to go higher again. According to data, since bottoming out in March at $150, the stock is now $365. Chairman Henry Samuli picked up 101,000 shares for $36 million. That's his first buy since 2003, according to Barron's, all right? Recent earnings, wireless sales to rebound in coming months. There's a lot to be looking forward. This company is big on the cloud, telecom, and 5G. They've got a lot of things in the cooker. Love this stock. AVGO, one of my favorite stocks in 2020. And again, when you look at the profile, you will see why. Look at these numbers. They're amazing. Earnings per share growth. Look at earnings estimates. I mean, look at this. 2 quarters of positive surprises, 4 quarters of better than expected earnings estimates. It's doing really well. Next stock is Weyerhaeuser. Now, why do I like this stock? Let me show you. It's breaking out above the 50-day moving average. Look and see what they do. Timberland, sustainable, wood, forest. Home sales are going up. You need wood to make homes, all right? They have more than 1,000 oil and gas producing wells on the land they own and lease. They manage timberlands on sustainable basis in compliance with internationally forest standards. That's really big with green laws right now. They've got recent exploration projects. They've got a lot of stuff going on. Most importantly, Director Albert Monaco, he bought 10,000 shares for an average price of $29.11, roughly where it's trading at right now. All right. And again, shares of this company could easily move higher on supply-demand issues. The decline combined with unexpected rebound in housing market has created shortage. This is a very good stock for the housing market. And again, as long as housing stocks are going to continue going higher, I like this company. So again, WY, NVIDIA, and the last one was AVGO, Broadcom, Love this company. Let me show you again the ticker symbol of that, AVGO. So let's review. S&P 500 and NASDAQ, neutral. Russell 2000, somewhat bullish, at least for now. Relative strength is on the side of the small caps. Volatility, you got to watch carefully. You may want to start putting attention to bank stocks because interest rates appear to be moving higher, or at least the market feels they will because bonds are falling down. Bonds down, interest rates higher. Remember, there's an inverse relationship, all right? Very, very important. As far as momentum levels, I'm not seeing anything drastic, but NASDAQ is overbought. We may start seeing some weakness in some NASDAQ stocks. As far as insider buying is concerned, we've got NVIDIA, Weyerhaeuser, rebound in real estate, especially residential, and 5G and the cloud. Really, really big. I love the technical action right now on AVGO. I love this congestion, low risk, low volatility, good entry. And I really like NVIDIA quite a bit. It looks like it's ready to take out all-time highs. I know I gave you a lot of information, but this was very important because I wanted to give you an overall idea of how the market's doing and give you some choosy buys that insiders are looking at as well. I hope that